Hey, Melissa, just moments ago, San Francisco Fed President Mary Daly, I believe, an interview with Reuters saying that, making some dovish comments saying the Fed can't wait forever to cut, and it's more likely the Fed needs to do more than 2 cuts this year rather than less. More on that in a second. But Daly joins Wall Street economists thinking the jobs numbers, they weren't political, they were real and could signal a possible slowdown. Goldman Sachs writing over the weekend, quote, Friday's payroll report brings payroll growth closer in line with big data indicators of job gains and the broader growth data set, both of which have slowed significantly in recent months. Taken together, the economic data confirm our view the U.S. economy is growing at a below potential pace. And the futures market is trading like that. The Fed funds futures are acting like these numbers are real, adding a third expected rate cut from the Fed this year. It's not much more than 50% or 55% in December, but that is new, that the Fed would cut at every meeting through the end of the year. On Friday, Atlanta Fed President Raphael Bostic telling CNBC, if it looks like the labor market is weakening in a sustained way, such that the risks on the side have increased to be greater than the risks on the inflation side, then I'd be open to increasing the number of cuts this year. Today, I don't see that. Well, before the jobs number, the Fed was missing only, obviously, on inflation. Weak job growth could mean it's missing on both sides of the mandate, with most thinking the Fed, it'll address jobs and worry about inflation later. Melissa?
Karen brings up an excellent point, as she always does, in terms of the impact of immigrants coming out of the labor force and the impact on numbers. Is that sort of anywhere in this discourse?
It absolutely is. In fact, Powell mentioned it at the press conference. It's so your equation of unemployment, right, is the total labor force minus those who are unemployed. But both sides, the labor force, are changing now, right? We have fewer people coming in. That means fewer people who are part of the workforce, people coming in, fewer people working. So all of that is a problem, and it's all changing. You could have 4.2% unemployment, and it could mean that many fewer people are working because you've reduced the size of the labor force. So it's a fascinating question, and it's probably a part of the reason for the big revisions. There's a lot of sort of unique stuff that's been going on. I've been talking to some labor economists that make it difficult for the seasonals and all kinds of other stuff that's out there to adjust over time. And one of the other things that could be is it could be an inflection point. If you have a situation where the things we use to adjust the data are looking for an expanding economy, an expanding workforce, and the economy is slowing and the workforce is not expanding, then, Melissa, I know it's a bigger answer than you wanted, but all of that does play an important factor in the statistics.